Imagine a dinosaur, a tired, old dinosaur selling used plastic boxes in an empty mall. That was GameStop. Everyone knew it was dying. You knew it, I knew it, and Wall Street billionaires definitely knew it. In the world of high finance, when you see a dying dinosaur, you don't just watch it die. You place a massive bet on exactly when it will stop breathing. And Wall Street placed the biggest bet in history. They used a trick called short selling. Think of it like this. You borrow your friend's video game and immediately sell it to a stranger for $20. You wait a month, the game becomes old and unpopular, and the price drops to $5. You buy it back for $5, return it to your friend, and keep the $15 profit. Your friend is none the wiser. Wall Street hedge funds did exactly this with millions of shares of GameStop. It was supposed to be easy money, the perfect crime, a guaranteed profit. But then a bunch of bored nerds on a website called Reddit looked closely at the math, and they noticed something that made their jaws drop. The Wall Street billionaires got too greedy. They hadn't just borrowed all the video games. They had somehow borrowed and sold more games than actually existed in the entire world. This wasn't just a mistake, it was a fatal trap. And Wall Street had walked right into it, locked the door, and swallowed the key. Enter a man sitting in his basement, wearing a red sweatband, talking to a webcam. He looked at this impossible math and told the internet one simple thing. Wall Street is stuck. If we buy the remaining GameStop stock and absolutely refuse to sell it to them, they will panic. They have to buy it back eventually to return what they borrowed. If we hold the stock, we control the price. We can demand anything. At first, the billionaires laughed. Why would they fear a bunch of anonymous teenagers using a phone app? But then, the internet did what the internet does best. It formed a mob. Millions of normal people, from college students to plumbers, started buying GameStop. $5 a share, then 10, then 20. The dying dinosaur was suddenly sprinting. Down on Wall Street, the laughing stopped. The hedge funds were losing millions of dollars a day. They needed to buy the stock back to stop the bleeding. But when they went to the market, they found a wall of internet trolls refusing to sell. The trap was springing shut. This is what financial experts call a short squeeze. But in plain English, it's called absolute financial torture. Imagine owing 100 extremely rare trading cards to a terrifying mob boss. The deadline is tomorrow. But the only person who owns those cards is a 12-year-old kid who hates you. The kid knows you need them. So the kid says, "Sure, I'll sell them to you for $1 million each. You have no choice but to pay." That is exactly what happened to a massive Wall Street hedge fund. They were bleeding cash so fast it looked like a magic trick. GameStop stock rocketed to $50, then $100, then $200. The internet was going absolutely insane. People who invested their meager life savings were suddenly millionaires overnight. They were buying billboards in Times Square, mocking the billionaires. It was the ultimate revenge of the little guy. The wealth was transferring from the penthouses in New York directly into the pockets of the working class. But the elite never lose without a fight. Just as the stock was about to cross $400, threatening to bankrupt the entire Wall Street system, the unthinkable happened. The game was suddenly paused. Imagine playing a basketball game. You're up by 50 points, and the referee suddenly steps on the court, takes the ball away, and says your team is no longer allowed to shoot. The very app that claimed to democratize finance for the common man suddenly removed the buy button for GameStop. You could still sell your stock, but you were completely banned from buying more. It was a digital guillotine. The panic was immediate. With no one allowed to buy, the price had only one direction to go, straight down. The stock plummeted. Fortunes were wiped out in hours. The internet screamed foul play. How could a free market suddenly stop being free the exact second the poor people started winning? The official story was that the brokerage apps simply ran out of collateral cash to back the trades. The pipes of the financial system were clogging up, but nobody bought that excuse. To the millions of people watching their screens, it looked like a blatant rescue mission. The rich guys called their friends in high places and simply unplugged the controller because they were losing. The outrage was so loud it echoed all the way to the halls of Congress. Suddenly, the basement nerds and the Wall Street titans were dragged in front of the United States government. Politicians who couldn't even turn on a computer were asking about internet message boards and market mechanics. The hedge fund managers wore sharp suits and read from teleprompters, looking absolutely terrified. The guy in the red sweatband sat in his gaming chair in his basement and simply said, "I like the stock." The hearings were a circus, but they revealed a dark, unspoken truth. The stock market wasn't a mystical force of nature, it was a casino. And the house always wins because the house makes the rules. When Wall Street blows up the economy, they get a government bailout. When normal people figure out a legal way to beat the system shuts down. The illusion of a fair game was shattered forever. Millions of people realized that the line between a genius financial strategy and a reckless gamble depends entirely on how much money you have to start with. But if you think this story ends with the internet crying and going home, you are dead wrong. The rebellion didn't just fade away into the history books, it mutated. The internet learned something incredibly dangerous. They learned they actually had power. Before this, Wall Street operated in total secrecy. Hedge funds could ruthlessly crush a company into dust, destroy thousands of jobs, and make billions doing it, all without anyone on the outside ever noticing. Not anymore. Now there is an entire army of regular people actively hunting for the next glitch in the matrix. They watch the short interest, they track the hedge fund movements, and they wait in the shadows. The GameStop saga proved that when enough normal people point their wallets in the exact same direction, they can break the unbreakable machine. The billionaires eventually survived, bailed out by even bigger billionaires, but the scar remains permanently. Wall Street operates in fear now. They know that somewhere in a basement, a kid eating instant noodles might just find the fatal flaw in their trillion-dollar math. They know the internet never sleeps, and more importantly, it never forgets. The video game store might still be a dying dinosaur, but it became the spark that ignited a modern financial revolution. The cheat codes to the global economy have been leaked, and the next time the system glitches, Wall Street won't be able to just pull the plug.